Wow, what a crash it was. Silver went all the way down into the 11s. And this is, that's an 11-year low for silver. And I was expecting something like this to happen. I just didn't know it would be to this extent. A couple of weeks ago, when all of the crisis started, I was saying that gold and silver may do one last big pullback before it's off to the races. So I sort of look at this like a gift from God. But this is this is part of a Zero Hedge article, and they're quoting me here. At no time in human history has silver been this cheap relative to gold. And then they embedded my video from yesterday in at the end of this article. So this is some amazing action we're seeing. And I know that people that already bought silver or that just bought silver they hate it when it goes down. But I'm not worried. I bought some silver the day before this happened, and I'm just not that worried about it. I know that one day I'm going to be glad that I'm in silver, and it's going to be in the triple digits. That's just what I feel is the truth for myself. So the prices went down on both gold and silver, but silver more so. And for quite a while, for a long time, I've been saying that when investors get scared and start rushing in, they will rush into gold first. Now, this is not on the price rising. This is on liquidation, most likely due to market margin call, because there have been huge drops in the general stock markets, and anybody that's leveraged, if they're using margin, they get margin call from the broker, and they've got to liquidate whatever they've got on their platform to come up with the cash. And so a lot of times they're selling gold and silver, even though it's a safe haven asset, to cover a bill that they got hit with because of the crisis, because the bets that they had went the wrong direction. And that has pushed the gold-silver ratio way up because people sold off silver before they sold gold. On the radar, the Fed is pouring gasoline into a car that doesn't have wheels. Thank you, Eddie. Puerto Rico is now on lockdown curfew from 9 p.m. to 5 a.m. Officials and emergency personnel can use the roads. Everyone else can get up to 6 months in jail and or a $5,000 fine, according to the executive order. Most businesses are closed, and this is all true. They've ordered all of the retail businesses closed. Restaurants can do takeout only. Bars and theaters and things like that definitely closed. Outside of curfew, you're supposed to just stay home. And so that's what it's like here in Puerto Rico. And last night, after this curfew, I've got a view, and there just wasn't a car on the road. The whole country is shut. So I want to welcome the 1,045 new subscribers since yesterday. Thank you very much. Any new subscribers coming to the channel now, make sure when you subscribe to hit that notification bell. The chart of the day is charts of the day. And what I've done here is on stock charts, it's the gold-silver ratio going back to 1970. And, in that article, I had said that there is no time in history that silver has been as undervalued compared to gold. And I think then it was at like 104 or something like that, 105. But look at what it did when silver plunged down into the high 11s. We got to a point on stock charts here. There's different feeds. So it depends on which feed from which exchange you're using. There's a couple dollars difference here and there on things, or a couple percent. So the high, though, 122.88. Now, I've been saying for years that it could go as high as 120, but seeing this early on in this crisis, I believe now that you could even see it at 150. So you might say, well, then why are you saying to buy into what, I don't tell anybody to buy silver. I buy silver myself. I just did some, day before, yesterday is when I did it. And through my own website, and I just add to my position, my storage account. But why would I buy silver if I think this ratio is going to keep climbing and that gold will outperform silver? Because I never know when this is going to reverse, and it might reverse with a vengeance and just be as lightning quick as this rise has been. And if you're right now, the leverage at, if we're up near 120 and it goes down to 12, you have a 10 to, it went down to 14 in 1980. I believe that it's probably going to go further than that this time. But even if it went, even at, if you sold your silver and traded it in for gold at a ratio of 24, you would be getting 5 times more gold than you paid for. If you could do it at 12, and that's a big if though, you're trying to catch a spike. I'm a little bit more conservative than that. I plan on doing this in tranches. But right now, at 120 to 1, it means that I'm going to be able to convert to gold and get a whole lot more gold. 2, 3, 4, 5 times more gold than I paid for. And so that's my plan. This is a close-up of that ratio, and what you see, it's just spectacular what it did in just the last couple of days. Absolutely amazing. And it's because of silver falling, though. That's the part that a lot of people don't like about watching this. But I'm really more into watching how much is the stock market worth in gold or silver? How much is a house worth in gold or silver? It's part of what I came up with years ago called wealth cycles. You'll see more about that later. But to me, this is just an opportunity, and I am buying more silver at these low prices, and it could still go lower. And, I'm starting to become a little bit cash poor at this point in time, but I'll somehow scrape up some extra currency to buy more silver at these low prices. Behind the scenes, in my book, I wrote that there was going to be the short-term threat of deflation, and that was 2008, and it would be followed by a big reflation and then a real deflationary crash. And when the crisis happened in 2008, everybody was screaming, inflation, inflation, inflation. And I still believed that that the theory that I had come up with was absolutely correct, and that's exactly what was going to happen. And so far, that is what's happening. And here I am. I visited Harry Dent's office. Harry Dent authored a couple books, but he's an expert on demographics. And he was one of the people that was saying it's deflation, not inflation, that we were going into. I believed in both. Deflation and then huge inflation or even a hyperinflation, depending on the response by the world central banks and the Federal Reserve. And at this point, seeing their responses, I think that we're actually headed a little bit more toward the hyperinflationary end or the absolute death of the dollar. The dollar probably won't disappear, though. It'll become a digital currency, probably backed by gold. And if it's backed by gold, look for gold way, way over $10,000 an ounce. Probably more like 40, 50, 100,000. It depends on where they stop expanding the currency supply. We don't know that yet. You might see $1 million an ounce gold, but it would have the purchasing power of, say, $10,000 or $20,000 an ounce gold today, which is still spectacular. If you could buy gold at the current price and then it goes up to $10,000 an ounce, that's a huge gain in purchasing power today. So I believe that is what's going to happen. And these are the things I wrote down in my book, and they are playing out. And it's all in Hidden Secrets of Money, too. So if you haven't watched that, we were interviewing Harry Dent for Hidden Secrets of Money. So he's in those episodes. You can take a look at it. Some viewer feedback, and this is from Zero, proof that the Federal Reserve has lost control. And that's the video that came out right after. I had made a prediction that the Fed is going to cut the rates to zero, And then while we're uploading that video to YouTube, they cut rates to 0. And so I made another video just a couple of hours later, showing that they're losing control right now. And they're just taking a wild ass guess at what to do. They're panicking. They're doing anything they can, but they're being reactionary instead of anticipatory. And they don't really have a plan. They're just pushing buttons and pulling knobs and typing trillions of dollars into existence that didn't exist a moment before, and then buying stuff with it, asset purchases. This is so immoral. But Ben says, how would fractional reserve lending work when the banks have no reserves? Any thoughts? Well, the reserves that they're talking about when they lowered the reserves, the Fed has lowered it to where thousands of banks don't have to have any reserves at all. These are the reserves that back your deposits. So there's nothing there. So it isn't the loans necessarily, it's the deposits. And taking the reserve ratio down on loans just means that they don't have to have no bank would have to have any of the currency that they're going to loan you. You want to buy a house, you want to buy a car, you want to charge on a credit card. They don't have to have anything. They just type it into a computer. They credit your account. It's instantly there. They don't have to have any reserves held at the Fed to be able to do that if it's in regards to fractional reserve lending. But other than vault cash, now we are in uncharted territory, and this is I made sure that before this crisis I had some extra cash at home, and it requires being calm and doing this over a time period. You don't want to rush to the bank and try and take out $10,000 today. That causes a problem. This is crazy. I'm sharing this information with everyone I know. Thank you very much. Thor 9. Massive civil unrest is coming. This nation will not be prepared for what is coming. I absolutely agree. This is one of the things that I'm worried about. And, with the economy in Puerto Rico here completely shut down and travel restrictions, I was scheduled to go and look at some ranches so that I can get out into the country away from where it's going to be very, very dangerous, I believe. But I could be subject to a $5,000 fine for just driving down the highway without a reason to be driving down the highway that's an allowed reason. Mike, I read what you said. I've been following you for years. I believe what you said because it made perfect sense. I tried telling everyone I know for years. They said I was crazy. I know how you feel. You were spot on, and I'm beyond glad I followed you. I owe you a debt of gratitude I'll never be able to repay. Thank you. Thank you. So, the quote of the day. Before I give you that, again, get my book. It's free. There's been some comments from people that have been reading the book, how much they liked it and how much it's still pertinent right now. That it's what it's got to say is something that you still need. That it's a message that you need to get today. And there's lots of information, and you can still see where things are going. Anyway, the quote of the day: Winston Churchill. The farther backward you can look, the further forward you are likely to see. So thank you very much, Winston. That, he has been sort of one of my teachers here with this quote. I sort of developed, that's how my book was written. That's how I've been able to sort of figure out what might happen in the future and try to predict these things and create the Hidden Secrets of Money series. And it's rewarding to see that all of the research that I did into the past to try and predict the future is playing out. Thank you very much for listening. If you got anything from it, please hit that thumbs up button, like it, and share it. Thank you very much. Bye.